Well, good morning. It's me, Kenny Polcari, and today is Monday, June 3rd, 2024. And here are the things you need to know. Well, first of all, it's kind of an overcast day here. It was raining a little bit this morning. The sky is kind of gray and cloudy. While the water is calm, it feels like it could be a kind of a disruptive day. But here are the things that you need to know to get your day started. So by now, you know that stocks rallied on Friday. The PCE and other data points are suggesting a slowing economy. The rate cut narrative is alive and well all over again. They started that whole story, right? The VIX plunges by better than 10% as investors digest this information. Bonds rallied, oil comes under pressure, and gold is just treading water at $23.50 an ounce. Jensen Hwang of Nvidia says, say hello to Rubin, coming in the fall of 2026. And what do we have for dinner tonight? We're gonna have the fresh-made fettuccine with roasted cherry peppers. So delicious. Okay, and easy to make. And I made it this weekend, and I'll show you a picture on my Twitter. In the meantime, stocks rallied at the end of last week after a new bout of volatility during the week caused stocks to struggle, but failed to continue to push stocks lower on Friday. It was the usual drama during the week, right? It was mixed economic global news. Then there was speculation about what the Fed and the ECB and the Bank of England were going to do. And then it was the build up to the Trump verdict and what that might mean for investors in the markets. We saw the S&P lose nearly 2% through Thursday, only to gain most of it back by the 4 p.m. bell on Friday. So it was kind of a very interesting day, the Dow, gaining substantially. The post-market news on Thursday, right, the news that DJT was found guilty on all 34 counts initially sent shivers through the markets in the post-trading session on Thursday, causing U.S. futures to plunge, if even only for a minute. That caused many investors to prepare themselves for what they thought was going to be another difficult day on Friday, yet that was not what happened at all. In fact, I say it all the time, politics can cause short-term chaos, and it usually does, and I think it did actually earlier in the week, last week, but really does it price stocks for the long term. But then we got all the Friday economic data, right? Beginning with the April PCE report, right? Remember, we discussed this at length in Friday's post. You can go back and look at it. And while it did not surprise us to the upside, it also did not surprise us to the downside. Analysts citing the fact that Friday's report showed the smallest increase in the past 6 months. Again, see how they position that? The key word there is smallest, but you see how it's being used? It's being positioned as it's a positive, that we should be happy that prices only increased by a small amount versus what they had been. Now, recall that the fear was that the PCE was going to tick up, sending the message that inflation may be reigniting itself, causing some to bet on a rate hike versus a rate cut at the next meeting. And remember, we heard plenty of that from a range of different Fed heads, right? In addition, we got personal spending report, and that came in weaker at negative 0.1% versus the expected positive 0.1%. And that suggests that the consumer is growing weary and tired of spending so much money, and maybe even tired of hearing the Bidens tell us that it's all good, that it's okay. At 9:45, we heard from Chicago, and we found out that the purchasing managers in that part of the country are not happy at all. Remember, in the PMI report, 50 is a dividing line, right? It's neutral. Anything above 50 indicates expansion, below 50 indicates contraction. Now, the further above or below the 50 line suggests either a strong expansion or a strong contraction. Kavish? Well, the May number was expected to be 41.6, which is already negative, and it came in at 35.4, which is even more negative. And that reason is so important for markets because the Chicago PMI is often seen as a lead indicator for the broader U.S. economy due to the region's diverse industrial base, right? There's a lot going on in kind of the mid part of the country, and so therefore investors will look at that as kind of an indicator. And that is all the algos needed to hear if they actually heard it, right? The weaker personal spending, the weaker Chicago PMI, the stable PCE report sent the algos into a buying frenzy, and boom, it was off to the races. The DJT issue ended up being a non-event for the markets, but it was a boom for his fundraising efforts. His campaign taking in some $50 million between Thursday evening and Friday morning, and another $150 million apparently through Sunday night, all in small donor donations, right? So you're talking $25, $50 apparently, because that's what they tell us. Now for investors, it was all about the value trades on Friday. The SPYV gained 1.6%, while the SPYG, which is the growth trade, only gained 0.6%. Now, value is still underperforming year to date at it's up 6%, while the growth trade is up 15%. But what the action tells us is that investors are finding opportunity away from just technology, right? Energy was up 2.5%, real estate up 2%, utilities up 1.8%, financials up 1.5%, consumer staples up 1.5%, healthcare up 1.5%, basic materials up 1.2%, industrials up 1.2%, leaving communications up 1%, not so bad, consumer discretionary up 0.6%, and tech really far behind it, up 0.2%. Now down the scale, we saw money move into retail in a big way. The XRT was up 2.25%. Names like Dollar Gen up 7%. BJ's was up 2.25%. Target up 4.2%. Walmart up 1.4%. Airlines, right? The Jets ETF up 2.1%. Coal names like BTU surging by 4.5%. Aerospace and defense ETFs, ITF 1.7% and XAR up 1.4%. Oil and gas exploration, XOP up 2.25%. The VIX plunged by 10.6% on this good news, lighting the fire underneath the multiple rate cut cult, suggesting there is nothing to worry about, with some now suggesting that we could see a June cut when the FOMC announces their decision in 2 weeks on June 12th. Now, to be clear, market consensus is for rates to remain unchanged, but there are always those that buck the trend and spin the story, right? I can't imagine that they're going to cut rates in 2 weeks. I just don't see it. I don't see it by the end of the year, never mind 2 weeks. Now, just so we're on the same page, the headline in this week's Barron's just about says all you need to know. And the headline says, and I quote, "Don't expect the Fed to cut interest rates this year." The article goes on to say that Chair Powell and his team, right, his team of merry men and women, had hoped to lower rates in 2024, but sticky inflation, a strong economy, and calendar quirks are thwarting those plans. Remember the 7 rate cut narrative in January? How they got the markets all excited? Do you remember how I asked what data points are these guys looking at that the Fed apparently doesn't see? Did they not hear JJ tell them that he was data dependent and the Fed was data dependent? No matter, because they laid it out. Traders and algos took it as gospel, taking the S&P up 12.5% through mid-May, from early January through mid-May. Now, it was supposed to be 1 cut beginning in March and then 1 cut every month thereafter. Yeah, well, how'd that work out? Well, the cuts didn't, but the market advance did, which leaves us a bit vulnerable to a pullback if they don't cut, right or wrong. Now, or will they succeed in pushing this rate cut story out to early 2025, which is what I think they're going to do. And by the way, that's when I think it happens as well, sometime in the first quarter of 2025. And all this good news sent bonds rallying on the idea of softer economic data, because that means lower rates. We saw the TLT rise by 0.6, the TLH rise by 0.8, the AG was up 0.3%. The 2-year yield fell 4 basis points to end the day, yielding 4.87%, while the 10-year fell by 4 basis points to yield 4.49%. Oil gets slammed, falling another 92 cents or 1.2% to end the day at 77.18, leaving oil down 10.6% off the April high, but still up 6% year to date. Once again, they're trying to tell us that demand in the US and China is weakening. Well, here at home, gasoline demand was supposedly down 1.4% year over year the week before Memorial Day weekend. So let's see what the data says this week after Memorial Day weekend. They're blaming warmer winter and the idea that higher for longer is destroying demand, right? Nothing new. That's been the story all along. I see nothing but traffic and cars all over I-95 down here in southern Florida, all kinds of traffic going to the Jersey Shore, the Outer Banks, Cape Cod, and the main coastline all along the East Coast. I can only imagine what's happening in the heartland and what's happening out on the West Coast. Maybe it's all those EVs that are now causing or destroying energy demand. I doubt it, but whatever. China's a mixed event as usual. Last week it was a weak economy in China, and then overnight last night we got the strongest data, with China's manufacturing activity expanding at the fastest pace in 2 years. So one day it's slow, the next day they're just booming. In any event, OPEC Plus met on Sunday last night, and as they expected, they're holding production cuts steady at 2.2 million barrels per day, but they indicated 2 things. The first is that the Saudis and the Russians will maintain their cuts well into 2025, while the second thing is that they plan on bringing back some production at the end of October for those members that have expressed frustration in controlling supply. So you got to think names like Iran, oh perfect, Iraq, United Arab Emirates, Nigeria, Libya, etc. The sense was that they have no desire to push prices lower by adding barrels, but they also need to strike a balance with the other members. Recall that the Saudis would love to see $80 to $100 barrel prices for a barrel of oil to support their ambitious spending plans. But non-OPEC members, think Canada, US, Brazil, Norway, etc., are keeping supplies healthy, causing some pressure on prices, and that's causing a migraine for the kingdom. Now, to be clear, the Saudis said that they're going to maintain our precautious and preemptive approach, which includes pausing or even reversing the phase out of these cuts that they just announced. As you can imagine, the reaction had mixed reviews, right, by analysts, some citing the bullish impact of the extension cuts, while others, led by Goldman Sachs, see it as bearish. This morning, oil is up 20 cents at $77.20 a barrel, leaving us just a chin hair below the trend line at $77.60. So oil continues to just kind of churn around the trend line. Gold, which should have rallied on Friday on the rate cut idea, did not, and that suggests that there is some near-term exhaustion for this asset. Remember, gold has had an incredible move this year, right? It's up more than 16% by mid-May on the lower rate cut narrative. So I think that we saw some investors just take money out of gold and plow it into the market on Friday, where they expect to see more growth and actually some divvy payments, right? Because remember, gold is not a dividend-paying asset, right? It's not an interest-bearing asset. It's not a growth trade. It's gold. It's all about the safety trade in owning gold, right? Which is always good to have. But if investors find a more compelling opportunity, then they're going to take money from the safety trade and they're going to plow it into that opportunity, in this case, the market, right? In the end, gold was up 1.8% for the month of May. Not so bad. It is also now below the short-term trend line support at 23.58, but it is trying hard to hold on. This morning, gold is trading at 23.47. I think it holds here and it tries to tease a bit higher. At 8 a.m., Dow futures are down 25 points, right? But remember, they were up 575 points on Friday. S&Ps are up 10, the Nasdaq's up 85, with Russell surging by 26 points or 1.2%, way out in the lead. GME is surging 100% after Roaring Kitty posted a $116 million share position with an average cost of about $21 a share overnight on Reddit. This morning, the stock is trading at $43.50. That's an $8 billion change in value for the company from Friday to this morning. Nvidia, well, that's also surging, but for different reasons. Remember, CEO Jensen Hwang told us that he was going to upgrade their AI accelerators every year. They already introduced us to the Blackwell Ultra chip, which is due out this year, in early 2025. And overnight, at the Computex conference in Taiwan, he introduced the next generation, Rubin, and that's due out in 2026. In addition, he introduced new tools and software, reiterating his views that the rise of generative AI is the new industrial revolution, and he expects to play the lead role in this movie. Nvidia is trading up $33 at $1,129 a share. And remember, they're about to split that 10 for 1 next week. Eco data today includes U.S. manufacturing PMIs, S&P estimate of 50.9, while the ISM has it at 49.6, both hugging that neutral line of 50. I almost fell in the water. Then we have ISM prices paid, and that's expected to be 59.5, down from 60.9, which would suggest less upward pressure on prices, so think slowing inflation. But the data point that's going to dominate the talk this week is Friday's NFP report, where it's expected to show an increase of 190,000 jobs, with unemployment remaining at 3.9%. Average hourly earnings month over month up 0.3, and year over year up 3.9%. European stocks are higher this morning. Germany and Euro stocks are up 0.9, with the UK carrying up the rear at up 0.4%. Eurozone manufacturing PMI due out later this morning. Recall that Eurozone inflation rose by 2.6% in May, slightly above the estimate of 2.5%, all while the ECB is still expected to cut rates on Thursday, June 6th. UK construction spending and manufacturing PMIs are also due out later today. The S&P closed at 5277, up 42 points, leaving us just 53 points away from the May 23rd high of 5340. And with the ongoing rate cut narrative alive and well, and more positive news out of Nvidia, that's affecting nearly any industry that uses tech, which, by the way, is every single one of them, I suspect that we're going to try to kiss and test 5340 today, which is just up 53 points or 1.1% from here. And futures are already up 10 points. So what's another 40 points amongst friends? I mean, it could happen for sure. May not, but it could. But I think it happened. If it doesn't happen today, I think it's going to happen sometime this week. Anyway, call me to discuss your long-term game plan. I'm always happy to engage and to talk about markets and planning and generating wealth for a lifetime. Generational wealth. Okay, what do we have for dinner tonight? Well, we made this over the weekend. We had friends over and had dinner outside under the stars. It was perfect. Oven roasted cherry tomatoes with garlic, shallots, onions over fresh made fettuccine. Now, I posted a picture on Sunday evening right on my Twitter, so it's at Kenny Polcari. It was simple to make and it was so delicious and well received. For this, we used small cherry tomatoes left whole. Do not slice them. Sliced shallots, diced onions, plenty of sliced garlic. We used 6 or 7 cloves, salt and pepper, and then a drizzle of very fine olive oil. I bought the freshly made fettuccine at Doris's Italian Market across the street and a block of Parmigiana cheese to grate over the pasta when we served it. Now, you preheat the oven to 350 degrees. You put the tomatoes, the shallots, the onions, the garlic in the Pyrex roasting dish, season it with salt and pepper, drizzle it with olive oil, place it in the oven and roast it for 30 to 40 minutes. You can see them. The tomatoes will start to get soft and some of them will explode, others will not. When you're ready, about 10 minutes before, bring a pot of salted water to a rolling boil, add the fresh pasta. Cook this for no more than 3 or 4 minutes, right? Taste it to be sure, but if you cook it for too long, it becomes mush. Strain it, but you're going to add 1 ladle of the pasta water to the roasted tomatoes, right? You've taken those out of the oven; they're on top now. You're going to add a ladle of pasta water. Strain the pasta. Now, using your tongs, twist the pasta and place the pasta in the center of the bowl. Now, take a ladle and top the pasta with the cherry tomato sauce. Freshly grate the cheese and serve this immediately. Enjoy with your favorite wine. Now, we enjoyed it with a bottle of Plump Jack Cabernet, which was the people who came to visit brought it with them, so we enjoyed that under the stars. It was a perfect evening. The weather could not have been better, and the stars were just spectacular. In any event, let's see what the stars say today. Like I said, it still feels a little bit stormy out here today with the gray clouds above me. The sun's trying to pop through, but there's plenty of gray clouds. Until tomorrow, take good care.